What's going on, guys? Today, we've got a great conversation with Polina Pompliano. She's my wife, but she's also the founder and editor-in-chief of The Profile. In this conversation, we dig into some very complex topics. We talk about not only what's going on with the Bitcoin price, which everyone's got an opinion on, but we also talk about what's going on in the United States of America, in the economy. Why is it that the working class got left behind over the last couple of decades? What is the current administration doing? Why are they letting the stock market go ahead and fall? And why does it seem like they're actually trying to help the working class more than the rich people? On top of that, we get into what my thoughts are around the tax rates, the tariffs, and many other things that have been implemented from an economic policy standpoint. This conversation dives into these topics. I don't have all the answers, but I'm trying to do my best to understand what's going on, try to think about why we got here and what we can do to actually improve the future for millions of people. And I'd love to hear your personal opinions. What do you agree with? What do you disagree with? Let me know in the comments. It's always very helpful to get more feedback. That's how I learn, and hopefully you'll learn something from this conversation. So here's my latest conversation with Polina Pompliano. All right, Polina, what's the first topic?
All right. So let's start with the current state of Bitcoin right now. What's going on? It is currently at 87,629.
Well, I think that there's a lot of investors who they're being cautiously optimistic right now. You know, when Trump got elected back in November, there's a ton of people who were exuberant, right? Hey, we got a pro-business, pro-growth, pro-technology person coming into the office. Obviously, he's pro-Bitcoin as well. And so they started to deploy a lot of capital. Now, what a lot of people forget is that markets are forward-looking. So they start deploying capital looking forward to what is going to happen. And so you had this huge run-up in asset prices, stocks went up, Bitcoin went up, et cetera. Now, when Trump got into office, he's delivered on a lot of his plans in terms of he pardoned certain people. He was able to establish the Bitcoin Strategic Reserve. He, really started to try to fulfill a number of the campaign promises. Now, at the same time he's doing that stuff, he's also fulfilling campaign promises that may not be good for asset prices. So he is trying to cut government spending. A huge reason why asset prices continue to go up is because the government is spending out of control, where they're devaluing the dollar. If the dollar's being devalued, then asset prices push higher. On top of that, he is also putting tariffs on, taking them off, and he's playing this negotiating game, which creates uncertainty. And so the reason why I call it cautious optimism is because people are optimistic in the medium to long term. They think that an America First strategy. They think that Donald Trump and this administration are going to be good for the economy, for companies, and for asset prices. But in the short term, they're very cautious because there is so much uncertainty. There's kind of this chaotic, negotiating that's going on. And so naturally, when people are uncertain or they are cautious, what do? They want to seek safety. And so what you've seen them go into certain assets where they're not being allocated to Bitcoin or other things. Now, the interesting thing about Bitcoin is that Bitcoin still is treated by some portion of the population as the savings technology that is their safety, but another portion of the population looks at it as a risk asset.
Yeah.
And so what you're starting to see now is that more and more capital is flowing into the market via ETFs or other mechanisms that are coming from people who look at Bitcoin as a risk asset, not as a savings technology. So historically, the retail investor, they just dollar cost average into Bitcoin. They never sell their Bitcoin. And it really is something that did not have a lot of price sensitivity to it. And you saw this in prior drawdowns of 80%, where a very large portion of people just wouldn't sell their Bitcoin, even though it had dropped so significantly. That's not how Wall Street operates. Wall Street looks at things as risk on or risk off. And right now they're going risk off. And when they go risk off, the things that are on the chopping block in their portfolio are things like Bitcoin. And so naturally, you're seeing them say, hey, look, I'm going to let this cool off a little bit. Now, Bitcoin is still up more than 100% from when the ETFs were actually approved, right? I think it was trading at like $40,000. We're now at almost $90,000. So over the last 15 months or so, Bitcoin has still had this incredible performance. It's just that everyone wants to look at the local high, which was, $108,000, $109,000. It's like, oh my God, it's coming down. This is very natural in a bull market to have these kind of 30% drawdowns. And so what I think that tells you is that we're still in a bull market. It's still structurally exactly kind of what you would expect. The numbers are just getting much, much bigger now. Now you're seeing $30,000 swings where maybe historically you saw hundreds of dollars or thousands of dollars. We're talking tens of thousands of dollars now. And so I think it's just a combination of kind of natural stuff in a Bitcoin market along with the macro environment and investors really saying, hey, let me kind of see how this plays out here. And once I get some clarity, then I'll start to deploy capital back into the market.
Do you think, and remind me because I haven't been fully paying attention to this, but does this have anything to do with the crypto digital asset stockpile that he has versus the Bitcoin one, etc.
So basically what they did is there is a strategic Bitcoin reserve. It's only Bitcoin.
Okay.
That is strategic in nature. And it is really considered, in my opinion, the same thing like the gold strategic reserve, right? It is something that the country wants to get a bunch of and they want to continue to hold. I think the market is significantly underpricing the odds that the current administration is going to be maniacal about acquiring more Bitcoin. I think that everyone is sitting there saying, oh, they're going to put the 200,000 Bitcoin in there that we already have. That's cute. I think these guys are going to be psychopaths in acquiring more Bitcoin. They're going to find as many budget neutral ways that they possibly can to go buy more Bitcoin. So that's the strategic Bitcoin reserve. Then you have the digital asset stockpile. That digital asset stockpile is assets that we already have through confiscation from law enforcement or whatever.
And these are cryptocurrencies outside of Bitcoin.
Everything other than Bitcoin. Those are going in this stockpile. Now, it's not very strategic, and they're saying they're not going to buy more of that.
Okay.
So it's only the United States is focused on buying more Bitcoin, not more digital assets in general. And so really what they're saying is like, hey, we're going to hold on to things that have been confiscated because of law enforcement activities. And then Bitcoin is really the strategic asset. Now, I actually agree with that idea with one twist. So they've separated Bitcoin from the crypto assets. I know a lot of people who are like, look, I'm not a Bitcoin maximalist, but I still think Bitcoin should be the only strategic asset, right? I know a lot of people who fall in that camp. With these other ones, I think we should actually sell the other crypto assets to buy more Bitcoin. So rather than basically hold the equivalent of tech, lottery tickets, no different than a tech stock, the United States isn't in the business of buying Apple stock or Amazon stock or anything else. So the same thing should be true of the crypto assets. So sell these other crypto assets, buy more Bitcoin. We've already established that Bitcoin is the strategic asset. That's the thing that we should be focusing 100% of our time on. But look, the president and his administration, they reserve the right to kind of figure out what their strategy is going to be. And right now they've set up a strategic Bitcoin reserve, a digital asset stockpile. They're two different things. And Bitcoin is the only thing that they're focused on trying to buy more of. And I think that people are significantly underpricing just how much they're going to be able to buy.
Understood. Stocks have been jumping yesterday and today on optimism that Donald Trump may hold back from implementing some of his wide-ranging tariff plans. Bitcoin's price jumped 3% on the news from 84K to 88K. Meanwhile, uncertainty about the economy has led investors to look beyond U.S. stock markets, the U.S. stock market for gains. The whole tariff situation, is this just, I feel like it's like whiplash. One day he's doing it, the other day he's not. Is this just the negotiating tactic? Like what's going on here?
Well, I think that it's both. There's definitely negotiating leverage that's being generated from this. If you say to somebody, we're going to put a 25% tariff on you, and they say, we're going to cut off electricity to the United States from Canada, and you come over the top and say, fine, now the tariff's going to be 200%. Guess what they do? They call up and say, let's talk. So there's definitely negotiating that's happening. Along with that, though, is Trump ran a tariff experiment in 2018. He issued very specific tariffs. Prices of those assets actually went down, not up. He was able to lower federal income tax level simultaneously. And so that experiment, I think, is being extrapolated. He's now going to go to this tariff era. And so what he's doing is he's now issuing blanket tariffs. And there's a lot of people who don't, like this. They're worried about it, whatever. But you have to bring back American manufacturing. And so if you go back to the start of America, the reason why we had a 5% tariff on all imports was because we wanted to protect American industries. You had this fragile kind of industrialization that was starting, and you wanted to be able to build these industries. So what do? You punish external producers and you reward the domestic producers. Well, look at the situation we have right now. You can't argue that these industries are necessarily in their infancy. There's many things like steel, et cetera, that have been around for literally centuries. But you could argue that they're actually very fragile, right? If look at something like wood. The Canadian producers of certain lumber are being subsidized by their government, and it gives them an advantage to flood the American market with cheap wood. Okay, great. Well, if you're going to go and subsidize your producers and the United States is not, you now are giving your people an advantage. So for us to level the playing field, we should put a tariff on that wood so that now American producers can produce wood at a competitive price to the Canadians. It's not like Canada has some special technology to create wood that we don't have. Right? Instead, it is that they're being subsidized by their government. And so anytime that a government is intervening in a market, what they are trying to do is they are trying to create an advantage, whether that is an advantage in their economy for some of their manufacturers and producers or whatever. So now the United States, who historically has said, we're going to try to play this global free trade game. Everything should be, unsubsidized, no tariffs, etc. We're waking up and we're realizing people have been taking advantage of America. And so the same way that our founding fathers were worried about Europe taking advantage of America and crushing the American industries, they use this playbook of tariffs. The US today is doing the same thing, but it's not necessarily industries in their infancy. Now what we're just saying is there's a lot of industries that are not going to be able to be competitive on a global stage unless we do this. So guess what happens? If you go and you put tariffs on certain products, if you're an American consumer, if you don't want to pay the higher prices of the imported goods, then buy the domestically produced ones, right? That's the whole point of the tariff, is you are actually creating an incentive. People always look at tariffs as punishment, but tariffs are an incentive. What they are telling you is you can pay lower prices for domestically produced goods. The whole idea of buy American goods, right? Support American workers, support American businesses. That was a political statement previously that people would talk about. They'd go to rallies, they'd yell it. It sounded good from politicians on stage, whatever. Now, economic policy is starting to implement this, but here's the dirty secret. There's a bunch of people who are going to come to the United States and they are going to actually go and make investments in the US. Since Trump took office, there's been $3 trillion, trillion with a T, of announcements of investments in America. Saudi Arabia said they're going to do $600 billion. UAE said they're going to do $1.4 trillion.
And how realistic is that? How could we hold them to that?
I don't think that you can necessarily well, you promised, right? What I think ends up happening is exactly what's playing out, which is we created an incentive. They want to come here. They want to invest here, right? Because, the thing that I always say is that America is the major leagues of capitalism. Point blank, period. We are the major leagues. If you're a capitalist, if you're a business executive, if you're a founder, if you're an investor, you're playing in the little leagues anywhere else in the world. Come to the major leagues. We got the most robust capital markets. We've got the highest density of entrepreneurial, ambitious people. We have, I would argue, the best economy with the most valuable consumers, all these things. Everyone wants to be successful in America. And so guess what these people who have all this capital want to do? They want to service the American market. And so it's not just countries like the UAE and Saudi Arabia. You also have TSMC. I think they announced $20 billion. NVIDIA, I think they announced $20 billion. Apple, they announced something like $100 billion. You see all these announcements happening and you say to yourself, these people want to do business in America. They want to invest here. And some of it may be that there's incentives and they feel like America's open for business and business people are in charge and let's go. And some of it's going to be a stick. There's going to be a lot of people who say, if I don't do this, I'm going to get tariffed. And so what it does is it opens conversation. Let's talk about computer chips, right? This is something that I think people don't quite wrap their head around yet. The United States wants to go ahead and incentivize the production of these silicone chips in the United States. We can't be reliant on other countries for the production of one of the most important physical products for the next 20, 30, 50 years, right? So an easy way to do that would be just tariff all of the chips that are coming into the United States and incentivize domestic production. Great. But the problem is the demand is so heavy for those chips that when you put the tariffs on, if the prices rise, there's a lag period before the American manufacturing can get up and running. So what you have to do now is you have to play a game where there's an intersection of economics, of human psychology and incentives, of geopolitics, right? Of national security. All of these things are coming together. And I think that's why you see so many smart people coming from the business world that now are interested in the political stuff, because they're realizing this is a global complex game. And if we actually want to create solutions for America, we're going to have to figure this out. And so I don't envy the people in these positions, but what I do know is that previously we were trying to solve the problems, but it's like we were blindfolded. Right? We were like, okay, well, I have some of my senses. I can hear, I can touch, maybe I can smell, right? I got a couple things that I can do. But all of a sudden, we're taking the blindfold off. We're saying we got way more tools. We got way more senses that we can use to try to solve this problem. Imagine if I tried to solve the puzzle, now I can see. Obviously, I got a better shot at doing it. The US government's showing up and they're saying, look, we got carrots, we got sticks, we got negotiating, we got diplomatic efforts, we got all these different things. We want to do business. We want to figure out